Welcome back, everyone, once again to our deep dive. You know, we love to tackle your toughest questions, and today we're diving headfirst into one that's been keeping you up at night. Is Roblox stock, ticker symbol, RBLX, a buy?
A fascinating challenge for sure, especially given the wild ride the stock has taken.
Exactly. You shared that you bought in at the 2021 peak. Ouch, talk about bad timing, right?
Mm.
Right after that, the stock plummeted, a gut-wrenching 85%, bottoming out around $25 a share.
Rough times for anyone who bought in back then.
It's recovered a bit since then, but you're still deep in the red. Wondering if there's any hope for a comeback. So we pulled together a mountain of financial reports, analyst opinions, even the company profile to help you figure out if it's time to cut your losses or hold on for dear life.
First things first, let's remind everyone what Roblox actually is, because even seasoned investors sometimes need a refresher.
Totally. Sometimes the basics get lost in all the stock market chaos.
Right. So at its core, Roblox is an online entertainment platform where users, especially younger ones, can create and play 3D experiences. Think of it as a virtual playground for the imagination. Except this playground has been around since 2006 and went public in 2021.
And they don't just provide the playground. They give users powerful tools to build on it, right?
Absolutely. Roblox Studio lets users design and build their own games, and Roblox Cloud provides the behind-the-scenes infrastructure to make it all work. The company's HQ is in San Mateo, California, and the CEO is David Baszucki. Now, those are just the basics. To figure out if it's a buy, we need to look at those financials. And I'm afraid the news isn't great.
Yeah. Let's rip off that bandage and face the music.
Roblox's recent performance, unfortunately, it looks like a sea of red ink. From 2020 all the way through projections for 2024, they're consistently showing negative net income and operating income. Not what investors want to see.
Definitely not. It's a bit alarming, especially since you mentioned their revenue has been growing. What's the deal there?
Here's the catch. While their revenue is growing, their costs are growing even faster, especially in research and development. They're spending big on innovation, but it hasn't translated into profit yet. For example, revenue is projected to jump by a decent 28.68% in 2024, but operating income will still be negative.
Okay, so that confirms what you've been seeing in your portfolio. But why is this happening? Let's turn to the analysts and see if they can shed some light on this mystery.
The analysts. Always a source of lively debate. And in this case, their opinions are a real mixed bag. Overall, the average rating on Roblox is buy, suggesting they see long-term potential.
Okay, so there's some hope there, but I have a feeling there's a but coming.
There is indeed. While the overall sentiment is positive, the average 12-month price target from 21 analysts is $62.19. Now, that might sound good, but the current price is $65.20, so they're actually predicting a 4.62% decrease.
So in the short term, they're expecting the stock to dip even further. That's got to sting. Any insight into why the analysts are so torn?
If we dig into individual opinions, the picture gets even more muddled. Ross Sandler at Barclays recently downgraded Roblox to a hold with a price target of just $46. Not exactly a vote of confidence.
Yikes. But you said the average rating is still buy. Someone must be feeling optimistic, right?
Sure, absolutely. Aaron Lee over at Macquarie, for example, has kept a buy rating and even bumped his price target up from $71 to $76. He's clearly betting on that long-term potential.
Wow. Talk about a difference of opinion. This is why analyzing stocks can be so fascinating and frustrating at the same time.
The analysts seem to be caught between the current reality of Roblox's financials and the potential they see in its future. It's like they're saying, yeah, things look rough now, but E.T.
All right, so we've established there's a but out there somewhere. Let's dive into the forecasts and see if we can uncover some concrete reasons for optimism.
Let's do it. And when we look at the future projections, there are indeed some glimmers of hope. Revenue forecasts, for example, are very positive. They're projecting $5.37 billion for 2025 and a whopping $6.29 billion for 2026. Continued strong growth is definitely a plus.
So even though profits are lagging, they're expecting a serious revenue boost in the coming years. But will any of that translate into earnings? That's the real question on your mind, I'm sure.
It is, and while the EPS forecasts are improving, it's happening slowly. The estimate for 2027 is negative of $0.65, compared to negative $1.44 in 2025. Still negative, but hey, at least it's moving in the right direction.
Right, baby steps. Maybe, just maybe. All that investment in R&D will start paying off soon.
Right.
But we need to look deeper than just revenue and earnings, right?
We're absolutely right. To get the full picture, we need to dive into some key ratios and metrics, things that get really interesting when we start digging into those.
Okay, time to put on our detective hats and analyze those key ratios. Where do we start?
Let's kick things off with the price-to-sales ratio, or PS ratio for short. This tells us how much investors are willing to pay for each dollar of sales. Basically, is the price justified by the revenue they're bringing in?
A high PS ratio could mean the stock is overvalued, right? What's the story with Roblox?
Currently, their PS ratio sits at 11.87. Sounds high. But remember, back in 2021, during that peak hype, it was a whopping 31.11. So while it's still above average, it has come down significantly, possibly suggesting the stock is becoming more fairly valued.
Interesting. So even though the price has tanked, the relationship between price and sales is actually looking more reasonable now. What about debt? How much are they borrowing to fuel this growth?
That's where the debt-to-equity ratio comes in. It measures how much debt the company is using compared to its equity. High debt can be a red flag, but in Roblox's case, while their debt-to-equity ratio has increased, it's still relatively low at 8.03.
Okay, so not setting off any alarm bells just yet. But there's one ratio I'm always curious about, return on equity or ROE. It shows how efficiently a company is using shareholder money to make profits. Give it to me straight. What does Roblox's ROE look like?
Brace yourself, because this one is a bit of a shocker. Their ROE is currently a deeply negative 678.46%. That's not a typo, folks.
Whoa, that's not great. What does a number like that even mean for the average investor?
It's a clear sign of poor profitability, plain and simple. However, we do need to consider the context. This metric can be volatile for high-growth companies like Roblox who are investing heavily in the future.
So it's a concern, but not necessarily a death sentence.
Yeah.
Especially if those investments eventually pay off.
Precisely. We need to look at the bigger picture. Speaking of which, we can't ignore the elephant in the room. The metaverse, Roblox, is operating in a rapidly changing, still developing industry.
Right. That whole concept of persistent online worlds where people can interact and hang out, it's the buzzword of the moment, but it's still early days. Lots of potential, but lots of uncertainty, too.
Exactly. And that creates both opportunities and challenges for Roblox. On the one hand, they're a pioneer in this space with a huge user base and a well-established platform. They were building virtual worlds long before the metaverse became trendy.
But on the other hand, they're now facing competition from tech giants with deep pockets, Meta, Microsoft, you name it. They're all jumping on the metaverse bandwagon.
It's a classic David versus Goliath scenario. Roblox has the first mover advantage and deep knowledge of virtual worlds, but can they hold their own against these giants?
That's the million-dollar question, isn't it? Some investors believe Roblox's early lead and understanding of virtual worlds will give them a lasting edge. Kind of like how Amazon dominated e-commerce because they were there first.
Right. But others worry that tech giants have the resources and reach to eventually outmaneuver Roblox. It all comes back to whether they can keep innovating and stay ahead of the curve.
Which brings us back to those massive investments in R&D. They're betting big on the future, hoping to develop new features that keep users engaged and attract new ones.
Exactly. Those negative earnings we talked about earlier, they could be seen as the price of staying competitive in this dynamic industry. Not uncommon for high-growth companies to prioritize innovation and market share over short-term profits.
But there's always the risk that those investments won't pay off. They could end up chasing trends that fizzle out or spending a fortune on features nobody uses.
Risk is always part of the equation. We can't predict the future, but we can try to assess their track record, their leadership, their vision to gauge their chances of success.
Okay, so what does that vision look like? What are some of the specific areas Roblox is focusing on?
One that stands out is their push to expand beyond gaming and into other experiences. Think education, social interaction, virtual events, things like that.
Right. I've heard about virtual classrooms on Roblox, even virtual museums. They're recognizing that the metaverse could be so much more than just games.
Exactly. They're aiming to broaden their appeal and become a bigger part of people's lives, both online and off. It's a smart move to diversify their revenue streams and capture a larger share of the emerging metaverse market.
But expanding into new territory also presents challenges. Can they convince users that Roblox is the right platform for these non-gaming activities? Can they build the features and tools to make those experiences compelling?
Great points. It's not just about building the tech, it's about creating a thriving community around it.
Right, because ultimately the value of a platform like Roblox comes from its users and the content they create, which brings us to another key aspect. User-generated content. It's a huge part of their success, wouldn't you say?
Absolutely. Roblox has built this incredible ecosystem where users aren't just passive consumers, they're active creators.
Yeah.
It's like a giant virtual sandbox where anyone can build their own world, their own game, their own experience. That's a powerful model.
It is. And from an investor's perspective, this user-generated content is pure gold. Roblox doesn't have to shoulder the full burden of creating new content themselves. The user is doing a lot of the heavy lifting, coming up with ideas, building experiences, and attracting new users to the platform.
It's like a self-fulfilling prophecy. More creators lead to more content, which leads to more users, which attracts even more creators. Talk about a virtuous cycle.
Exactly. But even with this brilliant model, there are challenges. How do they manage this massive, decentralized community of creators? How do they ensure quality and safety, especially given that so many users are kids? And how do they balance the needs of creators with the needs of users? Yeah, those are big questions. And it sounds like Roblox has had its share of growing pains in these areas.
They have. There have been criticisms about content moderation, concerns about the fairness of their revenue-sharing model for creators, things like that.
So it's a delicate balancing act. They need to keep creators happy and engaged while also ensuring a safe and positive experience for users. It's not easy, and as they continue to grow, these challenges will only become more complex.
Definitely something investors need to keep an eye on. Are they taking steps to improve content moderation? Are they listening to creators and making adjustments to the platform? The long-term health of the ecosystem depends on it.
Because ultimately, the community is the heart of Roblox. Without a thriving ecosystem of creators and users, even the most advanced technology and the best financials won't matter much in the long run.
Right, the technology is just a tool. The real magic happens when people use that tool to create, connect, and build relationships with each other. Even though it's a digital platform, Roblox taps into something very human, our desire to create, explore, and be part of a community.
And that's what makes this such a fascinating case study. They're at the forefront of technological innovation, but their success hinges on understanding and nurturing these human elements.
Exactly. So to our listener who brought us this challenge, we've given you the data, the insights, the multiple perspectives. Now it's time to put it all together. Do you believe in Roblox's long-term vision?
Yeah.
Do you think they can overcome these challenges and capitalize on the enormous potential of the metaverse?
The decision is ultimately yours, but hopefully this deep dive has given you the information and the confidence to make an informed choice.
And remember, investing is a journey, not a destination. There will always be risks. There will always be uncertainties. But by doing your research, thinking critically, and staying informed, you can navigate those choppy waters and make smart decisions.
Couldn't have said it better myself.
Fine.
Thank you as always for tuning in until the end. Really appreciate it. We'll be back soon with another deep dive, tackling a new challenge and uncovering those hidden gems of knowledge. Until then, happy investing.